Do you think we're over the worst of the panic, if we can call it that, Alpesh?
Well, there's two ways of looking at it. If you look, and I'm looking off screen at a map of the regional banks and their performances, then they're not over the worst of it because, and I'm not going to speculatively name names of the ones which are suffering the most, they're not over the worst of it because you can still cause a panic and get a run on those banks. But when I look at the bigger map of the market, it looks like that is contained. Because when I look at the technology companies, the consumer electronics, communication service stocks over the past week, they're all up. Healthcare stocks are up. Consumer cyclicals are up. That didn't happen in 2008. Everything fell. Everything got correlated to the downside. So when you look at a map of the market, the problems seem quite contained to just the regional banks and to some extent some of the diversified banks like a Wells Fargo, but honestly those can easily weather any of this kind of storm. So they're not over the worst of it, the regional ones, but broadly the market, yeah, it seems to be on a little bit of a rip and probably breathing a sigh of relief right now.
You mentioned the 2008 financial crisis. I thought after that there were all these stress tests, making sure the banks had enough money so that if there was demand for people to withdraw their cash, that we wouldn't see any kind of jitters or panic like we saw in 2008. Is that not working then?
Ben, all credit to the BBC. How many times have I been on in the last, 15 years saying those stress tests are pretty fake. They are a really low threshold and they're looking at things which were easy for the banks to jump over. And to be honest, the stress tests wouldn't have had that much of an impact on this anyway, even if they were far, far more stringent, because the people who end up suffering are going to be people like you and me, just regular retail people who want to borrow on a mortgage, let's say. It's those people who they really tightened the reins on, not the big corporates. What's happened here is that there was a run on the bank because there was a bit of panic, and those banks don't just hold liquidity in cash. Yes, those bonds fell in value, but if you hold them to maturity, the way bonds work is it would have been okay. But a few venture capitalists decided, let's cause a run on the banks and say, oh, they're in severe financial trouble. So actually, it's well contained. And don't forget, the bailouts have come from HSBC in the UK, and they've come from the private sector in the US as well. They're not government bailouts directly. They're from the banks. So what's happened from 2008 is, forget the stress test, the process for saving these has changed. A bit like ABTA in the UK. If your airline industry goes down, it's the industry that's got to bail you out. And that's good.
Okay, Albert, I wish we had more time to discuss that process of the bailouts further, but we're out of time. Really good to get your thoughts. Alpesh Patel, Chief Executive of Prifinium Partners.